All right, what's going on, guys? So let's see if we're live here. We're gonna have to do an impromptu way to do this. It wasn't loading on the other on the other page. So I'm gonna try to do it this way instead for the show today. We'll keep it a little bit short and talk about this week in the market. Can you guys? Let me make sure you guys can see me. Let me get some feedback real quickly. Just give me a second here. We'll get sorted. Okay, cool. So it looks like we're live. Let's make sure we have this going. Good. All right, perfect. So I just want to make sure I just posted in our chat. So let me talk about this week. My name's Dan with Stockability. Some of you guys know me. We're going to do it a different way, but this week we'll do it directly live on Facebook. So this is our TakeStock show weekly. I'll talk about really what I want to talk about this week is the market. So kind of what happened. I want to talk about a few trades that I took in Roku. For me, it was a big kind of week messing with that stock. So I kind of want to talk about that a little bit as we go through this. So then I'll do some Q&A as well if you guys have questions. So, all right, cool. You guys can see me with the cap on. So yeah, if you guys have questions, let me know. I'll take them. So this trading week, I'll kind of talk about it briefly, go through, try to share my screen here in a moment. I think it was pretty choppy across the board. So when I came into this trading week, I'll talk about what I was doing a little bit in my books, where I was trying to focus on the market with like a few names, right? So I was trying to focus on like Tesla, Roku, Netflix. I really kind of stayed away from the market as a whole and also Beyond Meat. So one of the issues that I had this week was the entire NASDAQ was pretty much stuck in a wide range. So like we were getting like nice sell-offs for 1 or 2 hours and it like hit like a level, then bounce. Same with like Roku, which I'll talk about in a second, which I think is a good lesson for this week to kind of talk about as I go through some Q&A with all of you. So yeah, and if you guys have questions, feel free to ask. I'm going to go through. Let me just type through here so you guys can see this as we go through it. So basically this week I was short Roku pretty heavy. And I'll try to pull up the screen here in a second. Like I said, we were using a different platform to run our take stock, but I couldn't get it to work, and I was kind of waiting on the tired of the delay here. So I just decided to get it going. So I want to start a screen share if I can, and if I can't, that's fine. But what I wanted to do, it doesn't look like I'm able to do it, but I'll talk about it briefly. So this week, Roku. So I've been pretty much tracking the stock for a while. So a lot of like what I would consider like in the markets where you go for like big trades or like you try to like swing for the fence or you have a large P&L trade, I try to stock those trades like 1 or 2 weeks in advance. So Roku was a stock that's pretty much was vertical, right? And I can't pull the charts up, but I'll talk about it briefly. So this thing had traded all the way to 240. The start of the month, I was kind of watching it, had a nice little sell-off on the 13th. So I was like, okay, look, it rallied so hard, it started to come in a little bit. So I kept like stalking this thing and like trying to see if the flow was there because like the market's kind of been stuck in mud, right? Especially the options market where you kind of put on a trade right now and the options are moving, but it feels like it's just crawling through mud. So you're not getting a lot of like volatility expansion, and so you're not getting like these like premium explosions at all. So I was waiting and waiting. So finally this week on Monday, I started to build a really small position in this stock. I think 3 or 4 contracts. I kept adding to it. And then Tuesday, and I wish I could show the charts. Maybe I'll post it here later. Maybe I'll write a blog post on this. I really wanted to talk about this week. So basically Tuesday, right? So the market starts to sell off. This thing drops from 225s all the way to 218s. So if you don't know, Netflix reported earnings this week. They traded lower on earnings, so it dragged Roku down. So after hours, this thing traded to 211. And this is where I kind of want to talk about a lesson and go through Q&A. So next morning, I'm thinking, okay, look, I've got like 30 or 40 contracts on this thing, different strikes. This is going to be like 10, 15 grand in this position. Everything's looking amazing, right? And this is a thing that I think will help for a lot of traders when it's just good to reflect. I think hopefully it resonates for those of you who are struggling or get in the situation. So I woke up thinking, okay, look, this is going to be an awesome day. Like I'll be able to like hit it out of the park. Like I'm just going to cash in. Like that's it. And I've had this happen before, and it's not a fun situation to be in. So this is why I'm kind of talking about it. So the market opens Tuesday at like 217s, 218s. I'm like, okay, look, it might be a bad print. It's $6 higher than it was after hours. I don't see any news on this thing. There's no upgrade. There's like nothing at all. So I'm like, okay, whatever. I'm just going to sit in this position. The P&L, of course, was like $2,000 at the open. So it wasn't like where it was pre-market or after hours rather. But I was like, yeah, okay. So that first thing when you see the P&L of what you know it should be, then you see what it is like a mental kind of like hit, right? So I'm looking at that. So that doesn't make me too happy. So it's not super exciting to see that. So the hard thing about trading is you have to kind of wait it out and see, okay, look, is this going to pull back? So I just waited and waited pretty much all morning. It eventually kind of rallied on me. And that's where I knew I was in trouble, right? So one of the things I kind of talk about, and Sam talks about it too, he's not on today, he's busy with some other items, is before the market opens, I always kind of want to have an idea of where I want to get out of positions, right? So on Roku, and I wish I could show the charts, I just can't pull it up right now. On Roku, I wasn't able to get out of the position, right? There was just no way. So my target was like 211, 212 on the stock, and it kind of hit it after hours. So how do you get out of a losing trade, or how do you hedge it? And that's kind of what I want to talk about here today in the live on TakeStock. So there's a few different ways, right? And this is a situation where I think it's unique because normally if you're in a trade and it goes against you, like you instantly get in, you normally just get a stop out and you're out of the position. This trade was entirely different. So the trade Tuesday started profitable. So the P&L was like, I think it closed like 7,000. So you have a profitable P&L report. End of the day comes, it gaps down. You know it should be about 15, 18, maybe 20 depending. So everything looks good. But the next morning when a stock trades against you, whether it's higher or lower depending on your position, you have to adjust for it. So it's hard to then manage that trade. So in this particular situation, what could have been kind of the, looking back, and again, what could I have done differently to mitigate the loss or get out of it? So in all reality, there wasn't really much you can do. When a stock gaps up on you and you're short it, right, it's with options, it's kind of hard to do. Now, I could have sold call spreads on this thing to take in premium. I could have just taken the loss. I could have just sold the position. There's a lot of different things I could have done. So what I elected to do, and this isn't for everyone, but I'm just sharing my experience, is I started selling put options on the stock. So basically, Wednesday morning out of nowhere, it rallies from 215 to 225s, 226s. And this was like a 1 or 2 hour trade. So the easiest thing to do was just keep the core position of options that I had because there were so many. I sold some, but I couldn't get out in time. So I just started selling puts, right? So you have one part of your P&L that's profitable, and then one part that's like was profitable that's losing, right? So it's kind of like hedging the position out. Now, is this ideal? No, right? But trading is not always ideal, right? And I think this discussion, and I try to share it in our community a little bit, are discussions you kind of have to have, right? Because a lot of books or like even education, we teach next week, I'm teaching an options class. We can talk about how to prepare for markets, but there's situations like this where like it don't happen so often. You're not going to see this in a trading book. Like, how do I react, right? So these are kind of one-offs, and these kind of one-offs I think are good conversations to kind of have. So selling puts was an option. So, and no pun intended. So it kind of turned it into a put spread. Not intentionally, right? But if the stock just kept like running to 230, the puts I would sold would have been like net positive, wouldn't have made up for the premium I bought on the puts. So I kind of still would have lost money, but not as much. So that was option number one. Option number two was when the market opened up Wednesday morning, I was still like 1,800 and the P&L fluctuates, right? I could have just said, you know what, let me just take this money, call it a day, and get out of this position, right? That was option number two. Looking back, am I mad that I did that? No. But again, let me explain to you the mindset behind that. So, and if you've been there, you understand. When you're up really strong in a P&L and you see that number, and then you see it like disappear, and you're like, man, I'm only going to make this. It's always easier said than done to be like, hey, I would have done this, right? So And that's the thing with trading I think is important. And that's why this week, for those of you, every morning, not every morning, but typically Monday, Wednesday, and Fridays, we have a thing called guided trade sessions. So before the market opens, we take a look at what positions we have, what we think the market will do, and we develop a trading plan for the day. So this is why every morning, if you have positions on, right, even if you don't, just coming in and try to put a contingency plan together. If this does this, I need to do this. If that does that, I do this. The more and more you put those contingency plans together or trading plans together, when something happens that you don't expect to, your reaction to that event is a lot quicker, right? Versus panicking, not knowing what to do. So looking back at it, I kind of had a plan pre-market. But again, in the back of your mind, you see a P&L that was pretty big earlier the day before. You're like, man, this thing was like, this was a lock. It was a guaranteed like trade, right? So that's tough to stomach and it's tough to battle. So this has happened to me before in the world of trading in 14 years. It's bound to happen. So let me kind of talk about how do you deal with that. So like, even though it ended up being a net loss, and even though like I should have been positive, like how do you deal with that? And the best way over the years I've dealt with it is pretty simple. So typically what I try to do is like I just take the rest of the trading day off and I try to reset. So if that means like, go play golf, work in other business things, get outside, go run, I just try to step away from the computer, because typically if I end up trading in that mindset of like, man, I should have had this week, it typically is kind of a domino effect into other trades. So that's kind of one thing I want to caution to, and one thing I want to talk about is, yeah, you're going to have losing trades. You're going to have situations like this. But if you trade in that mindset of, hey, like now you're aggressive with the market, it usually never ends well. At least for me, it's never ended well. So that's kind of one thing I wanted to talk about this week. How close to the money did you sell those puts to offset the loss? So so this is what I did. So I had options for this week's expiration, next week's expiration. So I sold next week's like pretty much right at the money. I think I sold the 220s and then like 215s. And I have to go back and look. I even think I sold the November monthlies, because I was like, look, I'm just going to sell these, hit them. And then as we got to like previous high a day, I started to buy them back. So that's kind of what I did. And then when we got to the high yesterday, I re-shorted I bought the 220, so I day traded the position. So it's never ideal. Like, it's not fun. Like, the worst thing about trading, and I've kind of talked about it. It's funny. I had, after that day, met with my attorney. She has some of my other work and other ideas, businesses. And I was like, hey, I got to talk to you real quick. She's like, well, I got to vent. So she's like, all right. And I kept like talking. She's like, all right, you got to let it go. So the hardest thing with trading is when you put a plan together and it should do what it does and it doesn't. That's really, really tough to stomach, right? So yeah, that was tough. Yeah, so that's what I did on I can look exactly. I don't remember exactly where I sold them. Let me see if there's any more questions. And we kind of talked about this in the room this week as well, a little bit in our room there as well. So, but it didn't offset the loss that much, right? So I think it was more opportunity loss, where it's like, let's say you have a stock that you buy and you're up like 40 grand or so, whatever's arbitrary number on it. And then like it sells off and you're only up like 25. So then you get in that situation where you're like, hey, like, should I have sold at 40 or do I sell now? So that was kind of the situation I was in with the option side, which I wasn't too excited about, but I guess that kind of happens. Any questions you guys want to discuss on that? I wish I could share the charts of this or the screen. I can't. Normally we use Zoom to broadcast this. I couldn't figure, it wasn't connecting to Facebook, so I elected to just use this instead, just to kind of get this out. Happy to take questions. As far as the rest of the week went, the only other review that I looked at was Beyond Meat. So Beyond Meat was another position that I had on. So that was like kind of a saving grace, but it wasn't that big of a saving grace, and I'll explain why. So Beyond Meat was a position that I was stocking this week as well. So earlier in the week, BYND. So for those of you who don't know that stock, I do like to trade. In fact, it's selling off pretty hard right now. I was stocking this thing from like 190s. So this trade worked like perfect, right? So once we broke 184s this week, 177s printed. Then yesterday was like the day. Like this thing just sold off immense, like hard, which added to the P&L. So I scaled out of that position. and it helped me to balance out the red in the book from the Roku position. Now the problem was, and with that, and I'll kind of touch on a different topic, is this: I was weighted so heavily in the Roku position that I didn't weight the Beyond Meat position as much as I should have. So while it made money, I lost so much on the Roku side that it didn't really matter. So that's a discussion to have as well, and I'll kind of talk about it briefly. So there are certain situations where, at least the way I trade and we teach, I think Sam as well, is when we look at scenarios on price charts or stocks, right? What we try to do is gauge the potential of like how much could this stock run? Could it trade here? Could it trade here, there? Roku had the potential this week legitimately, and it did get there. It got to 210. It had the potential when I shorted it from 218, 220 to get to like 210s, 208s this week. Okay, so when I was analyzing risk on that, I was like, look, if I can get this to move 10 or 12 points, it warrants me putting on that size of a position to kind of swing for the fence. Now, when I look at a portfolio, there's things I take into account. So number one, it's end of the trading month, right? My P&L was kind of okay, not great. So I said, okay, look, this is an opportunity to really blow the P&L up on the upswing, and I shouldn't have to trade next week, right? Like I can be done for the month. Like I've got some other things outside trading I got to work on. So I was like, okay, look, this is what I'll do. Didn't work that way. After hours, it looked good, but obviously didn't work out. So that's why I sized the position so heavily. But now it puts you in a position, at least for me anyway, where look, next week I've got to come in, and I didn't really want to spend too much time trading next week, but now I've got to come in and kind of fix the P&L a little bit, which is, again, that's just part of trading. That's what it is. It's like any business you run. If you have a good quarter, a good week, like you've got to make adjustments, and that's just part of this business as well. So any questions I can go through, happy to answer on those. So Beyond Meat was another position. Other than that, there wasn't really too much else that I was super keen on trading this week. As far as overall market goes, the NASDAQ, the Dow, S&P are pretty much just stuck in mud. Now, I am short the QQQs and SPY through options. I have put options and I sold call spreads as well into next week. So I do have small positions on, nothing too heavy on this. Right now, the market's pretty much this week we're in a range. So I think on the future side, you had a few decent moves this week, nothing crazy. Oil was pretty much the winner, I'd say, this week. The Wednesday sell-off in oil was decent. You had a rally yesterday that yielded pretty good results if you were paying attention to that. As far as the rest of the market goes, I don't really want to be long anything right now. And this has kind of been the modus and the MO for the past like four weeks. And then even on the short side, it's like 1 or 2 day trades, because when we sell off, we're like catching levels that aren't really there and it's rallying. So it's tough to kind of stick with much of anything. So I guess this is more of a premium selling market. I do think, and I read something yesterday in regards to Bose Weinstein. He's a hedge fund guy that I follow mainly in credit markets. He had something interesting to say about volatility in the credit market. So I think he, for sure, I mean, he's much smarter than I'll ever be, is right on that. So I do think this election is going to create something. So I'm kind of just sitting back and waiting on the rest of the market and just trying to take shots here and there for little P&Ls. So that's kind of that. Any questions I can go through you guys have at all? That's just kind of what I wanted to share for this week, was kind of Roku and then Beyond Meat. The rest of it's just kind of sitting on the sideline and just trying to pick my spots in the market to try to figure out where I want to take my shots at. So it's been an up and down P&L month. Roku would have been the one for the month to really like set the P&L up to the roof, but it is what it is. You got to kind of move on, I guess. So yeah, any other questions I can go through? We're going to keep the show today short. Sam was out of town for the week. It's funny, somebody's writing a song in our chat right now that's pretty about the chop this week. That's pretty funny. Ranger Doug. So yeah, it's been a pretty slow week. Likely slow next week too. I just don't see a lot of action in the market until this election's done. I really thought, based on 2016 elections, like here's an example. So when they were talking healthcare last election cycle, a lot of these healthcare stocks would move. I thought for sure, like in some of these gun names, we were going to get movement. We're not really getting a lot of movement on much of anything. So it's real weird right now, but that's the market, so just kind of adjusting to it. So yeah, that's kind of all I have for you guys today. If you guys have questions, that's it. I try to answer the one question we had come through. Sorry to keep it short today, but Sam's not here. I just wanted to, that's really what I wanted to discuss this week, was some of the positions I put on, what I'm looking for next week in the market, and kind of talking about insights to, again, why it's so important pre-market to have contingency plans in place, to try to put together what-if scenarios. Because whether you're trading futures or Forex options, you've got to have those situations in place where you can kind of plan out, okay, look, how does this model out, right? If I put this capital to risk, what's best case scenario, like good, better, best? What's worst case scenario too? You got to put I'm telling you, it helps. In 14 years of doing this, even seeing that Roku position, it still bothers me. Like, so for those of you, like, how do you get over losing trades, or that you just don't? I don't think there's a way to do it. I think for sure it comes with time. So I think again, if I were to rate myself, I think I'd give myself a B on that. Maybe I was too hard-headed. Maybe I should have sold to make the $1,500, whatever it would have been. But yeah, we make our decisions. We live with them. So cool. All right, guys. Have a good weekend. Thanks for tuning in. Sorry that it's short. We'll have a longer show next week. We're going to try to do a student interview. So I'll see you guys next week. Hopefully it's not choppy. Hopefully we get some downside movement and kind of see what goes on there. So enjoy your weekends. We'll see you guys next week. Talk soon.